Good morning. Still, I guess in California. Good evening here. I'm in Warsaw right now. Pleasure to host the panel and subject decarbonization. Great list of panelists. Let me introduce them initially myself.
Okay, let me just get Robert Mullin over here also. So thanks so much, Arthur.
Right.
And reintroduce yourself to the group. It's day 2.
Okay.
Right, go ahead, Arthur.
Okay, hi. So the panel list consists of the David Elenowitz, Zero Carbon Partners, Robert Mullin, Marathon Resource Advisor, and Rishi Bhakar, VP of Energy Innovation Investments at Tenaska. So let me just have you, each individual panel members, introduce themselves and tell us a little bit of who they are and about their projects, and then we'll start talking about the issues related to decarbonization. So let's start with David Elenowitz.
Hi, thank you. I'm David Elenowitz, President of Zero Carbon Partners. My background, I spent about 25 years in private equity, investing and scaling companies from the tens of millions to the hundreds of millions of dollars. In addition to investing, I went in as chairman and CEO of all my companies. Last business was a flooring company called Empire, which I grew from 40 million to 700 million revenues. And then about 3 years ago, I decided to exit private equity and go 100% to try to solve climate change. And I did a deep dive into the area, and after a while realized we needed technologies and supporting companies to do that. So I set up a new entity called Zero Carbon Partners. I put $50 million, my money into it, and looked to set about investing in scaling companies, low carbon space. My main focus is on technologies and businesses that'll have the most impact on climate change, which I define as a minimum impact of 0.5 gigatons or 0.5 billions of tons of CO2 impact per year. I've made 5 investments to date. I've started 2 companies. I've developed my own technology for direct air capture, and I'm obviously fairly active and focused in the area, and think it's both an important and very interesting area from an investment standpoint.
Great. Then next up is Robert Mullin.
Great, thank you, Arthur, and thanks to Marty. It's great to be back at this conference after a few years, and appreciate you having me. So I come at this from a slightly different angle. My firm, Marathon Resource Advisors, invests across the natural resource spectrum and raw materials, with an emphasis on materials that are necessary for decarbonization. And I come to this having been a resource guy for the better part of 20 years. I was originally at the Franklin Templeton Group and helped them launch the Natural Resource Fund back in the mid-90s. Also, I not only run a fund that's focused on this area, that's focused on kind of free cash generating companies, so more mature companies in the resource space that are feeding into this decarbonization trend. But I also advise a small list of family offices on how to structure and think about and vet their various investments in renewables or green related technologies.
Great. And the next is Rishi Bhakar, which I mispronounced his company name, which is Tenaska, or it's probably one of the largest companies out there, probably in the world, dealing with energy. But me being ignorant, I'm probably pronouncing his name properly, but not the company that he's working for.
Thanks, Arthur. No, yeah, you got it right. Tenaska. We are not yet the largest energy company, but we are in the top 50 largest private companies in the U.S. Not in just energy, but largest private companies as ranked by Forbes. Again, my name is Rishi Bhakar, and I'm at Tenaska. For those that don't know Tenaska, we are an IPP. Our bread and butter is building power plants. We started in the natural gas side of things, and then migrated into solar and wind and battery storage side of things. I'm, a 25-year veteran in a couple of industries. In IT, that's where I started my career, and then last 15 years I've spent on the financing and investments side for energy companies. Specifically within Tenaska. I did private equity for about 10 years within Tenaska's capital management group, where we were manager of 2 private equity funds, $850 million and $2.5 billion funds. But for the last 4 years, I've been leading the innovation side, the investment side on the venture growth equity for Tenaska. I basically started the CBC group at Tenaska, looking at 4 years ago, nobody was talking about energy transition. That wasn't even a term that was widely used. We were talking about digitization, reducing carbon footprint, distributed energy and renewable energy. So it's a very interesting panel. All 3 of us have slightly different sort of focus areas, but at the same time, all of us are involved in decarbonization in different aspects of it. So I'm looking forward to having a rich discussion here.
So let me, it's obvious that we do have a problem here globally with potential net results of having too much of the carbon floating out there by burning up the fossil fuels. And but at the same time, none of you guys is there to solve the problems out of your good heart, right? Everybody needs to solve this problem, but there needs to be the reward. So I just wanted to present the question to David and saying, hey, where there is a greatest opportunity to actually do the above, meaning that solving the problem of getting rid of this carbon issue, and then also make not lose money on it or make money.
Right. Well, first I'd say that I don't know if I totally agree with you, because my commitment to climate change is out of simply wanting to solve climate change and not from a financial standpoint. At the same time, it's important to recognize that just throwing money at a bunch of things because you have good intentions isn't going to solve anything, because if it isn't going to be economic and offer return, you're not going to get the tens of millions or hundreds of millions or billions of dollars necessary. So, when I first got started a few years ago, no one wanted to have anything to do with this area. Now, certainly, and on an accelerated basis over the last 12 months, you heard about a lot of capital coming into the space. The basic metrics are, if you look at our CO2 levels, which are over 400 ppm or parts per million today, even if you do electrify everything and remove coal plants and everything else, you still have a problem. So you need to decarbonize industries, and you need to do carbon dioxide removal. To give an example with carbon dioxide removal, according to the IPCC, which is an international governmental investigative group, they estimate a minimum need to remove CO2 at the level of 10 to 20 gigatons or billions of tons a year. We estimate it's probably double that. If you use an imputed cost of carbon of say $100 a ton, that would translate to over $2 trillion a year. And that's for carbon dioxide removal alone. For carbon dioxide utilization, which is taking CO2 and putting into products like chemicals or plastics or e-fuels, that's estimated as another several trillions of dollars. Those industries today are close to zero. So you're going to go from zero to several trillions over the next several decades. And I think investors are realizing it. And certainly, as an investor, being early is better than being late. And that's why a lot of capital is flowing into the space.
So let me pose another question, maybe this time for Robert. So having seen all those challenges, where's the best place that one can actually, where's the greatest opportunity for the investors?
Yeah. So I think this is a complicated question, and what I hope not to come across as is a renewables skeptic. I just like to be a renewables realist in terms of how efficiently we can move to a lower carbon world with them as still as part of the mix. So in terms of investment opportunities in the traditional world, it's hard to really get efficiently to a zero carbon emission sort of environment without significant input from natural gas and uranium for nuclear. So I think those are two areas that one needs to pay attention to, and we do as well. But the areas that I think are most exciting, because I think we will build renewables very quickly, and there's an enormous amount of capital flowing there. what we have a big shortage of is the materials necessary. If you look at the goals to try and get to, 50% or 100% EV sales by 2030 or 2035, and 50% plus electricity generation from renewables by 2035 or 2040, you have to look at the materials necessary to do all that. Your average EV contains 7 times the amount of critical materials and metals as your average internal combustion engine car. Your average wind or solar power plant needs somewhere between 3 and 12 times as much of the same kind of materials. And we're talking about things like lithium and cobalt and nickel and graphite and PGMs and rare earth elements. The call
Those
on
are things that are easy to mine.
they're all very challenging
And a lot
to
of it's kind of
mine.
dirty mining.
And we're doing everything we can to make sure that we don't do it ourselves, and we're pushing it off on other parts of the world that may not do it as cleanly as we would do it ourselves if we were able to do it. But all of those things are I think huge challenges. And if you look, I mean, I'm a valuation guy. I like my businesses to be generating cash. Earlier this year, I did an analysis of the Bloomberg 650 largest renewables companies that were public. It's about $800 billion in market cap, with maybe another $200 billion in debt. So you're roughly $1 trillion in enterprise value. The underlying earnings of that group of companies was $5 billion. So you're trading at about 200 times what the existing earnings are. Flip side of that is I can invest in a lot of these companies that supply the underlying materials at 5 times earnings, 6 times earnings, 8 times earnings, in a world where almost every other sector is trading at historically very, very rich multiples. So to me, that's where the investment opportunity really lies. And with it, you get a little bit of an inflation protection bet as well, which most people don't want to take at the moment. But if you're a student of history, maybe that's interesting as well.
So I would like to make a quick comment on that. And much of the time I've been in the ship chartering or container leasing business, but when you think of things like we stop natural gas here or even oil from our country, the bunkers are getting cleaner now with the scrubbers and stuff, but you've got to transport a lot of the energy into our country, which makes it even a bigger drain on the economy as opposed to making it right there. But I think I could have given your speech on renewables and the fact that all these countries that we don't have the critical rare earths and places where copper can be made overseas have much worse pollution standards. So we should be going full blast on trying to get them as close to where the consumer is. And maybe, and I can't see why we don't do uranium like the Chinese are, and the Taiwanese and the South Koreans and the French. They're just really big on that, and we're the Saudi Arabia of natural gas, but we're banning it here. We're going to have to be all electric houses in California. So it seems like we're going backwards in some of these places.
Yeah. Sadly, the political rhetoric is, I think, at least in my opinion, counterproductive to the effort of really getting to an efficient and effective way to get to lower carbon emissions.
Staying on the subject of investments, which we kind of diverted a little bit, I wanted to ask Rishi about from your portfolio companies. What can you tell us about your companies that you're investing in? Because you already have like 3 or 4 investments, right?
Yeah, that's correct. So ours is slightly different than Robert's sort of investment. I think, Robert, you are more on the public market side of things. We are definitely on the private growth equity side of things, less on the resource. But I agree with Robert that there is a I won't call it a political environment, just an environment in terms of green, everything's green. We want to, leave fossil fuels behind. I think it's a nice, storyline that's out in the media. We do want to, do a lot of decarbonization. We do want to do a lot of renewables, but at the same time, it's not going to happen overnight. there is a real transition that needs to occur. And renewables and the green technologies will get you to from 0% to maybe 70-80%, but the last 20% is going to be very, very hard. And if not, but for newer technologies, it will be nearly impossible. And the second piece is energy production, energy generation, power and electricity. They're one piece of the puzzle. The broader decarbonization needs to happen in your traditional industries, which have historically been hard to decarbonize. And that's where we believe a lot of work needs to be done, a lot of investments need to be done, a lot of technologies need to be supported, from taking from David's side of things on direct air capture. That's an important technology. And carbon sequestration, that's another important technology. And also at the same time, trying to reduce energy that we use. While that's a noble goal for the developed countries, it is going to be very, very hard for the developing countries to reduce their energy use. As those companies develop, their energy intensity will continue to go higher and higher. And that's, I think to another point that somebody was making previously is that we do not want to do mining in the US in here, and we are sort of pushing the mining to other parts of the world where they may not do it as cleanly. So I think there has to be recognition that it's not just within US or EU, but we have to look at the carbon decarbonization as a global issue, and we can't be shifting production from here to somebody else's backyard just because we want to be green. So that's kind of the investment so that we are looking at. Is obviously our core business is on the power and electricity side of things in the US, but we want to support technologies and looking to invest in technologies that will help decarbonize globally, and we're also looking into other technologies like hydrogen. Again, there's a lot of hype around hydrogen as well. Green hydrogen, I can have a whole different panel on just hydrogen, but there's a hydrogen is an interesting area for us as a group to look at in terms of can it play a role in sort of bridging or helping and get to a lower carbon economy.
Mm-hmm. Right. Well, thank you. But in terms of the telling us if there's a one example on specifically on the company that is in your portfolio that is doing, that is on the subject of decarbonization. Have you done such investment, or is that proprietary information?
No, we have. I mean, we have invested in a company called AutoGrid that's based out of Redwood City that allows utilities to control distributed resources. So you want to be generating electricity at the point of usage. So there's it's more efficient to do that because there's no transmission losses. You're not transmitting energy. But one of the challenges there is that because these are smaller units of energy generation, they're harder to control, and without the clear sort of visibility for the utilities, it's even harder for the utilities to plan for it, and that's some of the challenges which we are seeing in California market, because you have so much rooftop solar and battery storage that have come up, and the utilities obviously they are now getting much better at it, but initially were sort of at a loss in terms of trying to figure out where are all these units will be coming and how will that impact the balance of the system that needs to be there, because at the end of the day it's utilities' responsibility to provide reliable and consistent sort of energy. When you turn the light switch on, everybody wants the light to be on at that point in time. So there's a lot of planning that needs to be done and a lot of resources that needs to be controlled. And because of that, utilities generally overbuild in terms of the capacity that they have. By using software like AutoGrid, you can reduce that and overbuild, and as a result of which you can lower the carbon footprint of that sort of grid, local grid, or the broad grid, if you will, in that area.
Well, thank you so much, Rishi. Robert, a quick question for you. I've been watching the program 60 Minutes like a while back. I don't remember, it's been 6 months ago or so, but that talk about the company that is backed somewhat by Bill Gates that basically puts into the concrete carbonized CO2. I mean, in the form of powder, and therefore sort of captures it and puts it into the concrete. What sort of technologies do we have out there like today to deal with this issue other than cutting it down? Is there any companies that you can tell us more about how physically those kind of what are the approaches nowadays to get rid of it physically? Whether is it a chemical reaction, or is it like physically hiding it somewhere? How does it work?
So most of those technologies don't exist in the publicly traded company realm, and so while I'm familiar with a lot of them and I've studied some of them, I don't really have a way to implement any of those. Carbon capture is going to be an important part of this entire mix. It's very helpful if in the process of that carbon capture, you're using it to an economic end. In other words, not just pulling carbon out of the air for the sake of doing it. It's in the effort to make a viable product. So doing that for concrete, using actually sustainably harvested wood for construction, all of that takes it out of carbon. There are some wonderful carbon capture projects that are actually tied up within the oil and gas space, because one of the biggest uses of carbon dioxide that you can harvest from power plants and things like that is to use that to go down into reservoirs and produce more natural gas or oil. I know that now goes over the line of what people seem to be acceptable as green or not. But the fact of the matter is, one of the world's best carbon capture businesses lies within a little company up in Canada called Whitecap Resources, which is an oil and gas producer, wonderfully efficient. And their Weyburn project is the single largest anthropogenic or anthropomorphic sequestering of carbon in North America, and the company trades at 4 times cash flow. So I think a big challenge for companies is to be able to take these technologies out of existing businesses, to find investors for them that perhaps will reward them with better multiples. Because certainly if that was a standalone business and a SPAC, it'd probably be worth 15 times sales. So I apologize, that's not quite the answer I know you were looking for, but in the realm of what I invest in, that's as close as I can come.
Yeah, Robert, I can jump in. This is Rishi here. In terms of technologies, I think you hit on some of the key ones, which is carbon capture and utilization for carbon for other things. There are companies that use carbon or pure carbon dioxide or carbon to convert into other types of chemicals that are subsequently used. And then there are sort of, again, I won't get into the sort of debate or the crossing the line, because, Tenaska had carbon capture projects that we were looking to develop 15 years ago, before the decarbonization wave. And we did not get a lot of support either from our sort of offtake counterparties or from the government either at that point in time. So, but now I think it's a well understood sort of piece of the puzzle that we do need to have that solution. And then you have other projects which again been in a lot in the news, some like it, some hate it, reforestation, right? That's a natural sort of way of capturing carbon by either reforesting your plants. There are companies that are working towards seeding wildfire burnt plants in California and Oregon that help build those carbon sort of natural carbon stores faster than what nature would. And there are companies that are working using swamps and algae in marine areas to again capture those kind of carbon. And I think carbon is one piece of it. There's the other aspect which is often lost and which is important in the oil and gas industry is methane emissions, right? Because that's if you in terms of the greenhouse gas impact for gas, methane has much more significant impact than carbon. So trying to reduce methane emissions, trying to capture methane and use it for things like there are companies that are using the methane that's flared today and running plants, small power plants to do Bitcoin mining, right? So there's some interesting technologies and use cases that are being developed to capture carbon.
And Arthur, you want me to jump in on your question on cement. So just to give perspective, cement and concrete represent about 8% of worldwide emissions, which is why there's such a focus on it. The company that you noted, I think it was part of that 60 Minutes discussion, was a company called Carbon Cure that an investment group that Gates helped found called Breakthrough Energy Ventures invested in. There's another company called Solidia, which BEV also invested in, that I led an $80 million capital raise a few months ago. I'm on the board there, and we also decarbonize the cement industry, reduce the amount of limestone, the amount of energy needed to make cement, and then also use CO2 in the production of concrete. So that's one way to do it. There are a number of emerging companies in different verticals, in steel as well, and in other areas. Again, these are not in the public markets yet because these are all fairly emerging technologies, so they tend to be, somewhat earlier stage. But from an investor standpoint, there's certainly a number of funds that have come to market or coming to market that are investing in these early stage companies or later stage, but still private companies, and as an opportunity for those who see that as a big opportunity. Again, with so much focus on reducing CO2 levels, there's a huge amount of pressure on cement and concrete companies or steel companies or chemical companies to reduce their carbon footprint. And so there's more and more focus on these technologies and companies that can reduce that. And there's a lot of funding that's coming to those companies because if they're successful in their technologies, these are potentially going to be multi-billion-dollar or tens of billion-dollar type businesses over time. In terms of to give an example, just in terms of other investments that we've done, as I mentioned, I invested in Solidia, which is CO2 to cement and concrete, a company called Entor Energy, which makes TPV cells, which are thermophotovoltaic cells, which is a very interesting form of storage for solar, because basically with solar, you need very long-term storage. Lithium batteries don't really do it for long-term, and this is a way to store that kind of energy in the form of heat in carbon blocks and then pull it back out via these TPV cells. And then, of course, in carbon dioxide removal, direct air capture, a company called Global Thermostat that I've invested in, which is one of the 3 major direct air capture companies in the world, which basically are removing CO2 from the air and capturing it, which can then be utilized for products or sequestered underground.
I'm just kind of curious, David, saying on the subject, how did you get involved? I mean, what made you take into this industry? What was the motivation, and why did you get involved in it?
Yeah, I mean, I've been thinking about addressing climate change for a while, but again, like lots of people, I sort of thought about it, I talked about it, but wasn't really doing it, and thought eventually I should be part of the solution, not part of the problem. And my background is in complex problem solving, and I thought, climate change obviously being a complex problem, that I could use some of that skill set there. So that's kind of how I entered it. And, it's interesting. I mean, basically, it's even though there's so much talk about this area and everyone's focused on it, there's still very, very few people who are really looking closely at supporting and investing these emerging companies, which are going to be the linchpin of solving climate change one day, because we have to decarbonize cement, we have to decarbonize chemicals and steel. We're going to have to form e-fuels one day as a substitute for fossil-based fuels, and we have to do carbon dioxide removal. So, somebody's got to do it. And that's what my motivation is. And, at the same time, it's a very interesting nexus between both doing something good for the world, obviously, which is climate change, and what happens to be a great investment opportunity, because by definition, these have to be enormous markets. If they're not enormous companies, we are all not going to solve climate change. So there have to be huge companies that come out that are decarbonizing industry or removing CO2 or putting it underground or some combination. So it's both a chance for those out there who are investors or care about climate change or ideally both to get involved and do something great for the world and also make a great return.
No, thank you. A quick question for Robert. So currently, who actually sets up the carbon, like the plan of what are the targets? I mean, who sets up the targets? What are the targets? Who measures any of those, carbons that are being emitted? And is the actual government looking into doing a long-term planning and figuring it out of what it is that we should be allowing into the air versus the industry, and how do we keep track of all this?
That is a wonderful question that I really don't have a good answer for. It is an alphabet soup of multi-jurisdictional, domestic and international agencies all trying to get a piece of this pie. Quite honestly, I don't have a good answer to that. That's an area that is more regulatory than the investment side, which I will happily pass on that if any of the other panelists have a better answer.
Yeah, I mean, no, you said it right. It's a mess in the sense that you have EU and national governments setting voluntary goals in terms of how much green energy they want, carbon reduction they want, and it's all voluntary. It was part of the Paris Agreement, right? That they signed up for. But at the same time, that's one sort of side of things. Then you have individual corporates, RE100 and others that they sign up with carbon project that individual corporations have signed up, saying that our carbon footprint, we want to be net zero, we want to be our supply chain to be clean, we want our company to be on not only just the carbon side, but generally on the ESG spectrum. We want to be at A, B, and C kind of levels. Right now, it is all voluntary. People sign up to different sort of treaties as nationals. They sign up into different groups and treaties as part of corporations. And then you have folks that try to manage in terms of the investors. They also want to push that, and some of the larger pension funds and insurance companies, they have goals of moving away from supporting fossil fuels. So it's all a hodgepodge, and it's almost always voluntary, if you will. And there's no real mechanism to enforce those goals either. Their desires. It's like I want to be my body fat be at 10%. I desire to be fit, but if I don't, I might die sooner. But that's kind of the level of enforcement we have with decarbonization as well. That we as a society might not succeed, but there we have it.
Hey guys, it's Marty. I just want to jump in for one quick second here. I know people talk a lot about carbon credits, and you guys are talking about the regulatory aspect around it. But the reality is we've had some robust tax credit platforms in the past. And I think like Georgia and the South, they have got a lot of really robust programs, and particularly like in movie credits. And they've come under intense scrutiny in the past as well, right? So even if you're trading these credits, there's nothing that promises you that it's going to be something simple and straightforward in the future.
Well, I think
So
that's
Marty,
very-
just to clarify, the credits that you're talking about are carbon offset credits, right? Not movie credits and not because
Yeah.
and
But you're gonna have the same problems trading them.
Well, I mean, if I think at the moment, I mean, the major credits at the moment, there's something called 45Q in the US, which provides up to $50 a ton for carbon dioxide removal and sequestration.
right.
In California, you have a traded credit called the low carbon fuel standard. It's trading for somewhere between $180 to $200 a ton of CO2. So I hear what you're saying about scrutiny, but most of those right now, there really isn't really an issue where people are questioning them. You know, if you're looking to trade carbon credits in Europe, got the EU ETS, which has been kind of one of the best performing traded credits in traded instruments of any type in the world. In California, CCAs, which are California carbon allowances. Again, you can invest in those, and those have performed very well. In the Northeast, you have what are called RGGIs, which are regional greenhouse gas emission credits. So I hear what you're saying, but I think the issue really isn't one of scrutiny. I think in general, these are accepted. I mean, like anything, there are, you know, nuances to investing in those. There may be some policy issues over time, but in general, you know, the extent one's bullish on the direction of the need to increase credits related to carbon, they tend to be, you know, getting a lot of support, and certainly a lot more capital moved into those over the last several months.
Yeah, that's right. And I think one of the questions in the Q&A was about whether credit offsets is a investable asset class. I think definitely it is an investable asset class, but I think you want to tread there carefully because a carbon offset is not the same as another carbon offset. You know, there are carbon offsets that trade at $7, $8, $9, $10 per ton, and there are carbon offsets that trade at 50, 60 euros per ton kind of thing. So, it's as David was saying, that it's a little bit more nuanced, and you really need to understand the carbon offsets and how they were created and what was the, there are things like additionality, the things like, what was the purpose and how they were created that will then sort of define how well they are received in the marketplace and how well will they trade subsequently. There are hedge funds that have set up funds that are going long on carbon offset, assuming that today we are at a point where not many people are investing and and don't understand it, and we are at a price which will only go up. So they are taking a long bet on carbon offsets.
Great.
And
I have a hard stop in 1 minute. So can you guys wrap up? Sorry about that.
Okay, well, I just wanted to summarize that I think that we touched the subject that I think that it's not going to be going away. And it was a great panel from the point of view of education for me, and then hopefully a lot of people in the audience, because this is going to be coming back in a big time, and I hope that everybody involved makes a big change for the planet, and then also makes a good business out of it, if all possible. And then from dark Warsaw, I just wanted to say good night.
And thank you, Arthur. And anybody who as you can see, I'm pretty passionate about this subject. If they want to chat offline, and please feel free to reach out to me. Marty, I think you're sharing the information to the attendees.
Yes.
Great.
All right.
Thanks, everybody.
Thank you very much.
Thank you.
I'll see you guys later.